look at the automaker for us, our senior markets correspondent. Of course, hometown trade here, George. Always want to root for the great state of Illinois, but Rivian sure loses a lot per car still.
They do, OJ. So, I mean, the after-hours action right now is pretty stable considering they missed on the EPS, but they were expected to come in at a loss of $1.21, and they actually missed that down $1.46. So that's about a about a 30% decrease relative to the $1.08 they actually posted for a loss last year. Keep in mind these are all losses. They actually beat on the top line sales. It looks like 1.16 billion was the print, better than the 1.15 billion estimate, and that's about a 3.3% increase compared to the same quarter last year, where they earned where they sold for revenue sake 1.12 billion. Last quarter, the guidance was 57,000 total units for 2024. I'd like to see the update on that. I haven't yet. But one of the challenges with the business overall, with the stock down close to 40% over the last year, as you allude to, was the losses. I mean, just to give you context for the business, excluding the quarter they just reported, sales are close to $5 billion at around 4.9, but just the cost of revenue is like $7 billion. And essentially, if you look at all the operating expenses, they're losing about $5.5 billion on, like I said, less than $5 billion in sales. So that's essentially about $6 a share in negative earnings that they have to contend with. So that explains why the stock is down. I don't know what the environment we're in for the EV space, in particular the companies that are on the fringe from a consumer standpoint. But Rivian does have the powertrain contract, which includes the transmissions and electrical components and batteries for the Amazon van. So that's a commercial element to their business that is relatively stable. And I think the consumer end has been challenged considering the environment we're in.
Okay. So, George, this is like a tough one because it seems like the vehicles are really popular. They're definitely a major Tesla competitor at this point in terms of just creeping into the EV market. They're delivering 14,000 cars, which is pretty good. But just financially, when Elon talks about these companies not surviving, I kind of sympathize because there's money they're lighting it on fire to make these cars. When does that correct? Like they've got these fancy like robotic factories and stuff. Like I thought all of that was supposed to be so that you can make an efficient business, but they're just, doing worse than expected on the earnings.
Yeah. Yeah, and so, I looked at Lucid. I talked about that one earlier. That one I don't think will be around, to be honest with you. It's just in a dire situation, and they don't have the powertrain commercial vehicle contract that Rivian does. So I think that's compelling for Rivian. Going back just a couple of quarters when I talked about Rivian, they seem to have a legitimate production problem because they seem to be stalled out right around the 50 to 60,000 unit availability, but they have to at least hit that number or then guide higher to increase their scalability, to have any validity in terms of moving the stock in the right direction. Unfortunately, right now, I think the environment that we're in is challenging. I don't think rates are going to come down nearly what they need to help keep a lot of these companies afloat, especially those that are burning money. I'm not saying that's going to be the case for Rivian. I think Lucid is in bigger trouble than Rivian. But I did notice here, and for whatever it's worth, you look at the EPS guidance for 2025, it was about a $2.49 negative number. It's now $2.64, but I did notice they revised over the past 3 months their sales number for next year. Typically, you'd like to see it go higher, but they had it around 7.7 billion, and right now it's at 6.6. So they're not looking for sales to at least match the numbers for next year that they reported last quarter.
Okay. All right, I guess, it's enough for them to get by right now. They really would love to see all the rate cut stuff come to fruition. Cheap money would really be lovely for them right now. But at least they're holding on to their production target. They're holding on to their profitability estimates as well. So no cuts is like the minimum here. Not sure that's going to be good enough for the stock, but at least it does kind of keep the bears a little bit off, because they are always kind of lingering in this stock. And at 1480, substantially up off the lows, it feels exposed if the numbers are unsatisfying. But I don't know. I guess because they kept their outlook okay, maybe they'll get forgiven. But they still are losing a lot of money.
Yeah, I'm not here to pacify and make light of any stock. I just look at the losses for Rivian. However, there is, like I said, the commercial contracts. If they can develop that further, that might be a game changer for Rivian, because they don't need the final goods production manufacturing plants that effectively the vehicles need. So, they could use that to help finance the expansion of their consumer vehicles and SUVs. So
True.
I think that again is a story, and maybe that's why the stock is holding up in the after hours. But like I said, it's not as bad as Lucid if you want to do comparisons to two EV automakers that are in the same sort of bad boat.
All right. Hey, George, I'm going to ask you to pivot with me for a second because we got Supermicro numbers late, but I know you were looking at it earlier today. This is a really big number here that could give us some hope for tomorrow. Their outlook for the 2025 sales, they're saying 26 to 30 billion. Street was looking for 23.6. Just a huge beat on the outlook for sales. The trailing number for sales was about in line. The adjusted EPS 625 versus 825. They say it doesn't compare to estimates. But the other big thing is that they're going to do a 10-for-1 forward split on the stock. So, $616 where it closed. We're trading at $692. We know the market loves to get jazzed up about stock splits in momentum trades, right?
Well, very much so. So, I looked at this one earlier too, OJ, and I had close to rounded up around 24 billion for the estimate for 2025. So the number that you mentioned is actually a pretty remarkable increase for that number. Earnings guidance, I think, is also going to be important here. And the reason I say this is because Supermicro, the profit margins aren't very robust. So they have a lot of room for expansion in that regard. And I think that's been a hang up. And that's also, I think, the stock, going into next year's earnings, aside from the sales adjustment they made, which is positive, the forward earnings multiple, it's only trading around 18 times forward earnings. So it was already kind of low. And I think it is that way because the profitability profile, the net profit margin for this business is quite low. So, there's a give and take on this one. And the reason I'm still apprehensive on this name, and this is something you have to consider, is the competition. Because if you look at the GPU servers and rack mount servers, you got deep competition. You got Dell, you have HPE, you also have essentially ANET, which is another competitor in that space, and IBM. So, the liquid cooled server is a cool technology, but is it cool enough or good enough to ward off a lot of competition? So I think that's one of the primary challenges with Supermicro. But nonetheless, it's right now it's one of the leaders in the plug and play for NVIDIA's GPUs, and that's why the revenue numbers are tremendous compared to last year, even the last 2 years, and even going forward.
Okay, all right. Looks like a big number. Looks like a clever timing for a stock split. We'll see. We'll see how it goes. I mean, it's a big rip in the aftermarket. It's helping futures too after we faded into the close. So it's got to hold, if we're looking for something positive tomorrow. This is about as good as it's going to get. If the market fades this number, then that's going to be very frustrating, obviously, with the big sales beat. All right, George, thanks for the analysis.